Good evening, everyone. Hello, and thank you for joining us. Fabrice, it's great to have you with us. Thank you for making the time. What do you need to know about Fabrice? Most of us know him as the founder of OLX and now FJ Labs. But I've learned recently Fabrice is from Nice in France, lives in New York, loves the life of exploration and adventure. And he's built not one, but three extremely successful companies that we don't always know about. The other two being Zwingli and Auckland. And just very delighted to have you with us, Fabrice.
Thank you for having me.
And before we get into the substance of this conversation, I really wanted to ask you about these Jeffersonian dinners you've been having all of these years. What do you think? What in your mind, Fabrice, is a good recipe, figuratively speaking, for these dinners, and what have they meant to you over time?
So the reason I have them, first of all, is think back to when you were in college. And in college, you're studying everything and anything, and you're having conversations on the meaning of life, and you're actually being extraordinarily thoughtful. This world, this simulation, matrix, whatever you want to call it, rewards specialization. And in fact, specialization is the reason we have the quality of life we have. But we as humans should not purely be defined by the job we do on a daily basis. And actually, I value being able to be polymathy and think through a whole bunch of different topics. And as a result, what I'd like to do is bring together about 10 people. So it's like 8 to 10 around a dinner table. And the format of a Jeffersonian dinner is that there's only one conversation at a time. You don't have side conversations. This way, the sum total of the minds at the table or on the issue. And of course, no one is expected to speak for more than 30 seconds or a minute at a time. And I give the topics ahead of time. And the topics are very far and varied. It could be like how to reinvent democracy for the 21st century, life in a post-singularity world, religion in 2100, the ethics and morality of torture, or sometimes the most open-minded ones are very interesting. It's like, what has been something that's been on your mind of late that, or something you've learned recently that you could share with everyone that is interesting? This way, everyone presents for 3, 4 minutes, and then we all discuss it for like 5, 10 minutes. And it's an amazing way to elevate the debate and by the way, the point is not to win the argument. The point is to get to the truth. And I find that we live in a world where intellectualism is not valued enough. And it's wonderful to be able to be thoughtful about a variety of topics with extraordinary people and some of the best friendships and frankly fascinating conversations that come in these. And I organize one about every 3 weeks, changing the guest list. And I'm, by the way, extraordinarily strict. Your phone cannot ring or you're not invited again. You cannot be 1 minute late or you're not invited again. Like I really and by having these crazy rules, people like take it seriously. They come prepared. They've read the questions. They know what they're going to talk about. And I change the guest list with like intellectuals, people from academia, policymakers, entrepreneurs, and people from a wide walk of life. And it's super, super fun. I wrote a blog post on dialoguing dinners on my blog. So if you could, I'll put the link in the chat, and you could read sample questions, organization, the email I sent to people about how to get ready, et cetera, et cetera.
That's amazing, Fabrice. Which is most when was the last time you hosted one such dinner?
I did one 3 weeks ago, and I'm going to one tomorrow night.
Oh, that's great. So you're not the only host, that means. You have others who host these dinners as well, similar format.
People have started copying what I do, and it's people from my circle actually that are hosting the one tomorrow night. There's an organization in the US called Dialogue, which is organized by Peter Thiel and Oren Hoffman, which
Mhm.
brings together well, now it's several hundred really smart people to talk about these types of problems. And so they help me organize. The organization has one event per year for extraordinary people. It's typically these days in California, it's like in April or May. And then during the year, I use the organization to curate and find people. So this way, I outsource, which is something I like to do in life. I outsource almost everything I can to focus on things that are the most fascinating. They help me find the guest list and think through questions.
That's amazing. You also have this thing, Fabrice, that you launched, I suppose, about a year ago. It's called Fabrice AI, and it's a way for the world at large to, in a sense, gain a window into your thinking. Um, For those of us who may not know about that, what can you tell us?
So in venture writ large right now, it's really a tale of two cities. Venture at large has been down like 70%, and yet there's been a massive recovery, at least in the US, in venture investing because of AI. In Q1 25, 73% of all investors in AI. And by the way, a year ago, I thought already AI was in a frothy bubble, and the bubble has only inflated more since, and we'll talk more about that later. But because I started being pitched infinite AI deals, I wanted to really understand what was easy, what was hard, and so I'm like, you know what? Why don't I code my own AI in order to understand where we are, and what are the complexities? And I started by using and GPT 3.5 or 3 didn't work actually 2 years ago, didn't work
Mhm.
particularly well. So I started using LangChain and Pinecone. Then I started using an open source library to do voice to text. Uh, Nothing worked particularly well, I have to admit, and the complexity was way greater than I thought, in the sense that the source files for all the data knowledge and data structure, which was basically everything I'd ever written, every podcast I'd been on, every YouTube video I uploaded, etc. The transcription of all of these, the separation of the speakers, so even the data formatting preparation was extraordinarily complex. And then the data retrieval was complicated. I had to use MongoDB because it didn't work in just MySQL. And I put all this work, literally 1,000 hours of work, and I thought originally it was going to be like 40. And eventually GPT released 4.0, and I ripped out my entire backend, connected 4.0, replaced my open source library for voice to text. So you put Whisper, and everything started working well. By the point of that is when people started pitching me things like copilots for XYZ, I realized, okay, when you're pitching me, I can code in a week. That is not a defensible viable idea with a moat. And most of these AI companies I was being pitched at insane valuations, honestly, were not that differentiated, didn't have a moat. And so it was extremely useful. It also showed me the risk of both OpenAI expanding its reach and little by little taking share from other AI companies. As time went by, I started ripping out all my backend. Now, right now, I temporarily turned off this AI. It's still running, but now I'm using a third-party company called Delphi because they were formatting better, and their voice interface. So the OpenAI doesn't have a great voice interface. So there's a company called 11 Labs that can replicate your lab, but I needed to code the API to connect to them and train it. And I figured, you know what, I already have all the data sets. I'll upload to Delphi, use them for now. But I'm currently coding the next version of Fabrice AI, which is a combination of my avatar you can have a call with and pitch me. So I'm currently transcribing all of the calls I'm having with founders, including the deck, the call, and my debrief and my recommendation. My hope is that ultimately founders can get intelligent feedback. It's not actually can it surface deals. It's just right now we get 300 deals inbound a week. We, FJ Labs, talk to 30 to 50 of them, and Fabrice, talk to like 5 of them. And so there's 270 founders a week that don't speak to anyone at FJ Labs, and there's 295 that don't speak to me. And so I'm like, you know what? If can I create an AI good enough that we can, as a service to humanity, that if you're a founder, you're going to get intelligent feedback. Now, oh, your presentation is not scripts. The total addressable market size is too low. The unit economics don't make that much sense. There's a lot of competition. So can I get there? I don't know. I only have 150 transcripts right now. I think I need at least 500 to be able to get there, but I'm playing with it, and maybe it'll even surface a few deals. I probably a year away from having something that I'm satisfied with, but frankly it's fun, right? It's an intellectual exercise as much as it is anything else, and it's a public service to founders out there. And Fabrice AI, actually, by the way, already works pretty well. You can't pitch it, but if you want to have a conversation on anything I've ever written about, so what are the current median valuations? What are the current trends? What are we investing in? And or how to host in a dialoguing salon, or my take on the climate. Like you can have a meaningful conversation, and it works really, really well for that. It just you can't pitch it ideas yet and have intelligent feedback.
I do something that I asked it, which I'm going to maybe quote later, just to check if that tallies up with your current thinking in the topic. But we'll get to that Reese, I think this is a great moment. I mean, you said 300 deals a week. You said a week, right?
Yes.
That's a lot. And then I believe you've had this four-step investing framework that you've stayed true to all of these years. Can you tell us about that?
Yes. So the 300 deals inbound. So most VCs are structured very differently from us, right? Like most VCs have these teams of analysts, and these poor analysts are basically cold calling and scoring LinkedIn and going up to tech conferences to try to find deals. In a way, we're in a very privileged position, right? I never intended to be VC. I describe myself as an accidental VC. It just so happened that when I started my very first company back in 1998, which is an eBay of Europe, um, I was a very visible consumer-facing internet CEO. So I was starting being approached by all these other founders, and at that time I was successful. Many people didn't really like what it meant to be a tech founder was not very clear, and even the basic stuff like what tech stack to use, etc., was not obvious. There was no open source. It cost millions to just turn the lights on. I had to build my own data center for the first startup I built, and and so I thought long and hard, should I be an angel investor in parallel to being a tech CEO? Because of course it is a distraction from your core mandate. And so I decided, you know what? If I can articulate lessons learned to others, it makes me a better founder. I'm running this horizontal multi-category site, as I did for OLX. If I can meet vertical founders and keep my fingers on the pulse of the market, it makes me a better founder. So it's okay to be an angel as long as I don't waste too much time. And so back in 98, I created these four selection criteria to decide in 1 hour if I would invest in a startup or not. So I'd meet the founder and I'd evaluate four things. One, do I like the team? Now, of course, every VC in the world will tell you, I only invest in extraordinary founders. The thing is, it can't, extraordinary founder cannot be like porn. It can't be, I know it when I see it. And so we've actually defined what that means. To me, that's someone who's extremely eloquent, who has a way with words, who can weave a super compelling story, and someone who's very eloquent and salesy can raise money at a higher valuation, can attract a better team, can do better BD deals, can get more PR. But that's a necessary but insufficient condition. You need someone who also knows how to execute. And the way I tease that in a 1 hour call, if they know how to execute, is number two, do I like the business? And so, what is the total addressable market size? What are the unit economics? We mostly are seed investors, so post launch, post product, early revenue. But even when we do invest pre launch, we expect people to have thought through it. Have they done landing page analysis? Based on that, what is the density of keywords in Google? What is the average CPC? Based on what is the conversion rate to people signing up? What do you think the customer acquisition cost is based on the average conversion rate from visit to purchase on in the category? What is the average order value in the industry? And by the way, they better be in line with the average order value in the industry, not expect to be 10x above it. What's the margin structure? Do they really understand their cost structure? Do they recoup their fully loaded costs on a CM2 basis or contribution margin 2 basis after 6 months? And do they 3x it in 18 months? And if not, will the unit economics improve with scale without needing all the stars of the multiverse to align? Number three, the deal terms. Nothing's cheap in tech, but is it fair? Is it fair in light of the traction, the opportunity, the team, et cetera? And number four, is it in line with their thesis of where the world is going? And I have a clear perspective on the future of food, the future of climate, the future of mobility, the future of real estate. And I want them something that is both useful to the world and meaningful that is in line with where I think the world is going. And I will invest if all four criteria are simultaneously met. So it's not 3 out of 4, it's literally 4 out of 4. An amazing team is not enough because if an amazing team meets a bad business model or a bad business, typically it's the reputation of the business that wins over amazing in the team. Now, some founders or some VCs will say the team will figure it out. The thing is that to me leads to too high a failure rate. So far, we've invested in 1,200 companies. We've had 355 exits. We've actually made money on 45% of our exits, which for a pre-seed seed investor is an extraordinary hit rate because in 95% of startups after 5 years that have raised a seed fail. So we're doing very, very well because we're disciplined evaluation, because we're disciplined unit economics. Um, Now the reason we get all this deal flow is because I have a brand. Yeah, people know me as the asset light network effect marketplace investor, and as a result, it's a very privileged position where the deals just come in. So we don't actually do really any outbound. The deals come in. The other VCs share deals with us. The founders that we've backed so far. So 1,200 companies, like 2,000 founders. They send us their friends. They come back to the next company. They send us their employees, and then of course cold inbound, and we get over 150 cold inbound deals per week.
That's very impressive. Fabrice, so you started this journey of angel investing and it worked out really well for you. In fact, you say it made you a better founder. For any of the founders here attending who have that question in their mind, should they start the angel investing journey? And if they already have, should they scale it? What would you say to them? And based just not on your experience, but maybe also based on the experience of your friends, which might have been different from yours.
I think it depends on you and who you are, what you want, what your comparative advantage is, etc. Like I'm intellectually curious polymath, right? And all these the reason I like angel investing is there's infinite problems in the world, and founders basically see these problems. And by the way, something like climate change or inequality of opportunity is not one problem, it's 1,000 sub problems. And so the way I see founders, they see problems and they want to go solve them. And I found it fascinating to be able to meet these founders that are brilliant people who want to solve these problems, to hear the stories and then share best practices with them. And the number of founders who've told them the interactions they've had with me have been meaningful. I've made me realize that I actually can get fundamental leverage through doing it. That said, in order to not be distracted, um, I only dealt with inbound deal flow, and I only focused on marketplaces because I knew that's what I knew innately, and I add this mechanism by which I would invest in a 1 hour meeting. So should you do it? Well, do you have free time? Do you have free cash? Do you like it? Is it interesting to you? And by the way, you're only going to make money if you have a diversified portfolio, meaning on average, if you invest in less than 50 startups, you're going to lose money. If you invest in more than 50, you're going to make money. The more companies you invest in, the better you end up doing. And so you really want a diversified portfolio. So should you scale it? Not necessarily. It's a reflection of your personality. If you like doing it, if you have an amazing deal flow, and if you have free cash and time, why not? Now, the reason I didn't intend, by the way, to become a venture capitalist post selling OLX. I created a family office, which was investing in companies, creating companies, but I tried a whole bunch of other things. I tried to buy Craigslist. I tried to buy eBay classifieds. I tried to convince the Castros to let me run a free trade zone in Cuba, actually a special administrative zone, copying what Deng Xiaoping had done in Guangdong. I thought of becoming a public intellectual. It's just all these things required someone else to say yes. And I threw the spaghetti at the wall. The spaghetti didn't stick. And writing people checks actually kind of worked. And then all of a sudden I started getting approached by third parties saying, I want exposure to what you do. And that's why I became a VC. But I'm a non-traditional VC because I'm a VC who behaves like an angel. Every year I invest in 150 deals. I write small checks. I don't lead. I don't price. I don't take board seats. And I try to be this value-added friendly guy. So only do it if you think it's fun and interesting and it's a reflection of your personality and you have a process and you have the deal flow. Like part of the reason, I mean, I like sharing and teaching, et cetera, but if you don't have the deal flow, getting it is hard, right? Like now, because you guys are visible and you're successful, thoughtful founders, I suspect you do have deal flow. But it's not obvious that you should do it. Many of my friends would rather use the time that they have post exit to do something else, and that's totally fine. And that could be anything, right? Like from investing more time in your family and friends and relationships, to hosting intellectual salons, to entering politics, to doing different forms of philanthropy. Now, my take of philanthropy is a bit contrarian because I actually find that what I do through tech is a form of philanthropy, right? As I said earlier, it's a founders see problems and they try to solve them. So then I try to solve problems that I think are meaningful. And the reason I like the for-profit mechanism is because it creates something that's scalable and repeatable and doesn't need to go fundraising every year on a go forward basis.
Uh, Fabrice, before I ask you the next question, this is for everyone in the audience. Please don't wait till the end for the Q&A. If you have something you'd like to ask Fabrice right away, let's do it. Maybe just leave your question or just tease your question out in the chat window, and I'm more than happy to invite you to come ask your question to Fabrice. Fabrice, before we go ahead, reaching out to the Castro family to set up a trade zone. We can't let you proceed before you tell us a little more about that.
So by formation, by background, I'm an economist. I studied economics at Princeton, and I one of the things I studied, by the way, was market design, which is why I was particularly well suited for creating marketplaces, in terms of like measuring elasticity of supply and demand, figuring out what the correct K creator business model was, etc. But I studied economic reform in China, and I was a huge fan of Deng Xiaoping, who basically single-handedly took 1 billion people out of poverty. And I went to live in China in 1994. I studied Mandarin at Beijing Normal University. And as I was thinking through after OLX of giving back and thinking through what could I do to make the world a better place, I'm like, these free trade zones and more importantly, special administrative zones have had profound impact on changing the livelihood of people around the world. You see what Dubai has become, despite not having the same natural resources than the other Arab states. And I love the Caribbean. I like splitting my time between the US and New York, which is a haven of an intellectual, social, artistic endeavors, with a place where I can be actually more reflective and I can go read, write, kite surf, do yoga, meditate. Now I'm working there, but then I play tennis, I play paddle, and that's my work-life balance. And I started looking at the time, so we're talking 2013, at Cuba. Cuba's foreign direct investment was about 100 million a year. The average salary is about $20 a month, and it's essentially a failed state. They have a highly qualified labor force where with super low GDP, nothing working, and they have large swath of the country that are underutilized and completely empty. So I'm like, look, give me a couple of percentage points of the country to build my special economic zone, where I'm essentially 70 miles from Florida. So creating a small agricultural and manufacturing hub, obviously using capitalism, where you can export to the U.S. Makes infinite sense. And they originally said yes. The reason they ultimately said no is I didn't just want a free trade zone. It needed to have a different constitution. It needed to have a different currency. It needed to be its own little city state because obviously I needed respect for property rights. There couldn't be arbitrary confiscation of all of these assets. The currency didn't need to be the dollar. It could be the yen. It could be the euro. It needed to be convertible. It couldn't be the Cuban peso. And they thought in a way that that was a step too far. Now, ultimately, I did think it probably was a good thing it didn't happen, because the issue is, imagine it had been very successful. I mean, they could have just confiscated it, right? Like, they have a military, I don't, so I'm not sure it would have been, I could have kept it even if it worked extremely well. Difference between the state itself and doing it like Deng Xiaoping did, and being a third party foreigner trying to implement it. But it was a great idea. I think it would have worked because bringing incentive structures and systems there. And I had actually a couple hundred million. I think I had 900 million lined up, which was like triple the FDI per year of the country to go and build this. So didn't happen, but it's okay.
And a remarkable story to tell. Besides Dung, are there other economic reformers you look up to, Fabrice? Or if any of us are interested, you'd encourage us to read more about their work?
Well, my role models in heroes through history are probably Octavian, or Augustus, because he single-handedly created the Roman Empire, and he inherited from his uncle Julius Caesar at 17. It was not given that he was going to be the winner of with Mark Antony and the other pretenders to the throne. Even Cassius and Brutus could have pretended. And he put an end to the Civil War, created the Pax Romana, created a basically period of relative peace and stability that lasted for hundreds of years, and a quality of life that was unheard of at the time. The other one is Alexander Hamilton, right? The debates between Jefferson and Alexander Hamilton in terms of what the U.S. should become. We are all collectively glad that Alexander Hamilton won that, because Jefferson had more of a Rousseau-esque agrarian society. We don't repay the debt. We don't have a modern financial system, et cetera. And so where we ended was extraordinary. But then, of course, some of the economists that have played a fundamental role in creating the world we know today, like Keynes, right? and I don't mean Keynesian thinking. I actually think his actual impact of creating the IMF, creating the Bretton Woods systems to help rebuild post World War II, was profoundly, impactful in creating the post World Order that we had that led to basically peace, stability, and prosperity for whatever 70 years post-war, which is sadly coming to an end right now. And even the thoughts of like Friedman and others. So um, now of late, right, it's hard to have people that you look up to because in democracies by design, it's very hard to make changes, and so it's not the conflicts in democracies. It's not a bug; it's a feature of democracy. The founding fathers, and that's true of most democracies, wanted check and balances between the Senate. So the judiciary and the legislative and the executive, and that's why almost nothing gets done. But that's okay actually because the fundamental systems were pretty good. And people, are worried about all the conflicts that they see in today's democracies. But the reality is actually these they're not actually worse than they were before. I mean, people forget we had a full-blown civil war in the U.S. in the 19th century. There were like race riots in the 1960s. There were anti-war protests that were violent in the 1970s. What you have today, like, is nothing relative to that. And I think ultimately, even though it ebbs and flows, the system, does lead to the right outcomes. Even though, as Churchill said, the U.S. can be counted on making the right decision after all other options have been exhausted. Which of course is the second most popular quote of Churchill after that democracy is the word of all system except for all others. So yeah, are there great leaders in time that I also admire, et cetera? A la Churchill, absolutely. But in terms of economics, no. I think um, Deng is probably the one that has had the most impact of late. But what's interesting, of course, is now India is growing extremely rapidly and is helping get hundreds of millions of people out of poverty as well. So it's accelerated its cycle. Actually, no, the leaders of Singapore have been extraordinary. So I guess that's probably another another thing. The issue is with these dictatorships, though, is enlightened dictatorships. You're only as good as your dictator, and sometimes you have enlightened dictators like Deng, but then you have incompetent fools like Mao or Xi Jinping that set these countries back dramatically, right? Like Zimbabwe used to be the shining star of Africa, and then Mugabe destroyed it, or and these aspiring autocrats um, like like Erdogan in Turkey, right? Like he's betraying the legacy of Ataturk.
Fabrice, when did OLX first enter India? Which year was it?
Very early in our journey, the I'd been friends with Suvir and Avi
Mhm.
from Bazi, who of course had then sold to eBay, became eBay India,
Right.
and they and Suvir had created Nexus, which is a
Yeah.
venture capital firm, and OLX originally I would have preferred it to work in the West, but because there were incumbent marketplaces with liquidity, it didn't really take off. And so we opened kind of randomly in a whole bunch of countries. And then it really, really took off in places like Portugal and Brazil, et cetera. And Severe is like, look, um, I want to fund you, but you have to enter India. I think the market is amazing here. And in fact, I'll help you, find your country manager, and that was number two, I think the first employee at eBay India, which is Amar, who's on this call. So I don't actually remember the year, but Amar maybe does.
2000, it was 2008. I joined in the end, but I think OLX was already live that time.
Yeah,
So it must have been 2007. The site must have been live 2007.
yeah.
But it
So
was,
so
we cleaned up a few things because after that, but the real work started 2000, I mean, when we started scaling up for 2011, when we did our
yeah.
first big campaign. But during that time, we were doing some interesting, things about consolidating and stuff like that. I think, Fabrice, you can
Yeah.
tell better.
Yeah, and laying the groundwork. But yeah, we
Yes.
we basically launched very early, but like yeah, the real effort in cleaning up the site, making sure we had focus, having all
Yeah.
the languages, and making sure we're in all the different languages, and started when Amar joined in 2008. And the company was created in 2006, by the way, and we went
Right.
live We went live probably in early 2007. So very, very early in the journey of OLX.
Yeah. So 2008, Fabrice, that's like 17 years. And clearly there's been an economic transformation in those 17 years. Now, we've witnessed it firsthand. You maybe have a different perspective because you've always had one leg in and one leg out. So what does this look like to you?
I'd say that the main transformation, what led to the real explosion in India, Frank, I would say was 3G, right? Like once smartphones started coming of age and you started having these super cheap Android phones with 3G, you started having the entire population having access to, I mean, imagine today you're a poor farmer in India. You have the sum total of humanities knowledge in your pocket. You have free global video communications, and you have a super smart advisor in the form of GPT in your pocket. So basically, you have more access to information and more access to communications that the president of the United States did 25 years ago. And that's as a, a lower class farmer in Africa or in India. It's mind-boggling. People take for granted the revolution we've had, but it is so profoundly transformational and actually egalitarian, right? It gives people access to these tools in a way that they weren't before, and we lived it because we were early. Because the company I built before OLX was a mobile content company, we were early in the journey in discovering that we needed to go mobile. And so OLX from the beginning, we had a mobile website. We were very early with apps. We were very early in going in that direction. So we lived the Indian internet revolution through mobile from the very get-go. And what we did right was realizing if you want to reach people that are offline, the best way to do it is through TV. And that's why in 2011, we started doing these TV ads on, especially around cricket, which helped bring a lot of people online and of course helped consolidate OLX as the leading classified buy and sell site.
Reese, there's a couple of questions in the chat window. I'm maybe going to ask the one, or maybe Utsav, why don't you ask your question, please?
Yeah, building on that Cuba thing, what's the one crazy thing that you've attempted in the last decade that's not worked out, but you wish it did? I know you did something in real estate in the Caribbean, but I'm sure that's not the craziest.
I'll give you a few. In 2006, well, 5, when I left my prior company, Zingy, I went to see Craig of Craigslist, and I'm like, hey, you already have network effects. You're doing an amazing job, but you have a 1995 interface, and more importantly, you're not moderating any of the content on your site. Let me run it for free. Not because I want to make money, just because I want to make the world a better place. I want to provide a public service to humanity, and we can always talk later if you're happy about some form of compensation. Of course, even though I was credible because I'd sold my last company, I'd grown it to 200 million revenue, it's profitable. I didn't have any credibility necessarily in classifieds. He didn't take me seriously. So then I went back in 2013 when I left OLX. I went to Craig and I'm like, hey, look, I built a site bigger than Craigslist. 300 million uniques, 10,000 employees, 30 countries. It's amazing. And we've solved all the problems you have. Let me do this again for free. And he said no. I think he and the CEO were like so high on drugs. They were like fading out of consciousness. Didn't remember. I don't think they even remember we even met. They didn't remember we had met before. Every time I met them, they forgot we had met before. It's like mind-boggling. They just didn't care. I tried so many times over the years to take it over. I tried to buy it, they said no. I tried to run it, they said no, etc. So that one, because as I said earlier, these things, they require someone else to say yes. I tried to buy eBay Classified twice. So eBay owned very big classified sites in Western Europe and Canada and Australia, especially in Germany, eBay Kleinanzeigen. I tried to buy it in 2015. I'd lined up private equity. It was like a $6 or $7 billion deal. They said yes. They signed an LOI, but then they divested PayPal. And when they divested PayPal, they had enough money that they didn't feel they needed to anymore. So they changed their minds. So a year worth of work did it for nothing. I tried again in 2019 and it ultimately sold. And I thought I'd won, but actually they sold it instead to my biggest competitor at OLX, which was Adevinta. So sadly, I didn't win buying eBay classifieds. Now, in hindsight, I probably would have hated it because eBay is a ginormous company with they had OLX was kind of built for me, by me, and it's kind of, I would like to believe, an enlightened dictatorship with like pretty centralized everything, even though each country had local product and local, etc. Like we had one tech stack, and I could say jump, and people would say hi. And eBay was like different silos, different techs in every country, overlapping, fighting fiefdoms. Like probably I would have hated an organization like that. It would not have been easy to like to like execute on. So in hindsight, probably something good. But I try to build in the Caribbean and Dominican Republic a massive kind of off-grid commune, but not a commune in the communist sense of the word, more of a place where tech founders could come and build tech startups and innovate, where spiritual leaders can host events, where artists could come and create. And the idea was to foster something not too different or dissimilar to my Jeffersonian dinners by bringing smart people around to go and create things. And I bought several hundred acres of land. There was a mile of beachfront. The problem is the Dominican Republic was more of a banana republic than I expected it to be. And by the way, that was my second attempt. The first attempt with a massive piece of land of like in Belize, but that was definitely a banana republic and failed. And so I'm like, oh, Dominican Republic, it'll be fine, democracy, etc. But like everyone wanted bribes, from the local mafia to the mayor to the vice president of Ministry of Environment. I didn't want to bribe anyone. Maybe that was a mistake. And so after like 7 years of things going from bad to worse with tropical diseases, burglaries, poisoning my dog, we even got full on attacked by gunmen with shotguns. So there was a Call of Duty shootout in my garden. The time had come to move on. So I left after 7 years of essentially failure, lost like $8 million in the process, and I moved to a much smaller but much more beautiful and safe place in Turks and Caicos, where I don't have the incubator and all that stuff, but I do host 3 tech conferences every year. I brought the CEO of eBay. I bring unicorn founders to brainstorm about the future of humanity, the state of tech. I host a crypto conference, etc. So I do that, but I own like 7 acres of land, and it's much smaller. It doesn't have that. But I'm actually toying with the idea of trying again and moving to either Antigua or Nevis and getting like whatever 30, 50 acres and restarting that. But again, it's more for fun as much as anything else. It's like intellectually stimulating. It's less scalable, meaningful than what I do on the professional side, where some of the companies in a way that I've helped build, like Vinted. Vinted now is like 10 billion in GMV, 1 billion in net revenues, hundreds of millions of users. It's the first pan-European cross-border transactional site, and my right-hand man at OLX is now the CEO there, and so the leverage I have through my tech investing in terms of impacting and touching millions, if not billions of people, is way greater than these things. But these things are fun, and also they're an amazing place for me to bring my entire family and my extended family together.
Brice, before we switch our focus to marketplaces and AI, I'm seeing there's 2 or 3 questions that we can go through before we switch our focus. So, Amarjeet, would you like to ask your question? Then maybe Srijan can go on, and we'll take it from there.
Yeah, no, I think there are so many questions for Fabrice all the time. I think he's doing so much. I think it's fascinating. I think with the intensity and the speed at which you work, Fabrice, you always astonished me. You work on 5th gear, and I think sometimes I feel I'm on first, not even on the first. So really, always so amazing to hear you. I think I always also remember, I think whenever we used to chat about it, I think India was one. I mean, you're already investing in India a little bit, I know, but I handle emerging markets now for Spotify. But I know that when you used to build companies, and invest in them, you used to look at the world. When we started OLX, we were looking at, okay, how do we take great models from US and take it to the world? Of course, you have moved way ahead of that now. Now, what is the state, of your thought process about emerging markets? Because still there is not enough happening there, but also enough happening there. What is your current, understanding of this market and how you're investing? What do you think about the future? Love to hear your latest view on this.
Yeah. Maybe later I'll explain how I can do as much as I do, because I think there are many tricks in terms of what you can outsource in life and how to be productive in order to focus on the things that you love doing and not be distracted by all the things that take time that are actually non-value added and not in line with your own ethos. But FJ Labs throughout history, we've really been reasonably constant, which means we're about 50% US and Canada, about 20% Western Europe, about 15% in Latin America, 5-10% in India, and the rest of the world. India so emerging markets for us really is we prefer larger countries like Brazil, like India, because they're large enough that you can have companies that can scale to be unicorns just in that one country. You end up having actually viable venture capital ecosystems. You end up having exit markets, et cetera. So I like larger markets, but large markets like Nigeria and Kenya, which are 200 plus million, 100 plus million, are actually still too far down the curve. So we have a few investments there, but we're not a focus. But because of the geopolitical macro trend right now of the new Cold War between the West writ large and China. Well, I guess it's China, Russia, Iran, and North Korea on one side, and the West on the other side. Everyone's trying to move their supply chains out of China. And the only place that I think is scalable and interesting, and the most scalable and interesting, is India. But because India's manufacturing base is mostly SMEs as opposed to large manufacturers, I think there's a unique opportunity to invest in a lot of like these marketplaces that help small business manufacturers in India export and work with Western companies. That's why I'm investors in Ziad, which is helping apparel manufacturers in India sell to brands in the West, because they don't know how to answer RFQs, they don't know how to do prototyping, they don't know how to do customs and export, et cetera. And we're doing this kind of vertical by vertical. In fact, Utsav, one of his thesis right now is like scaling manufacturing in India and investing in manufacturing companies, which is fully aligned with this general macro trend of like moving manufacturing out of China, especially in India, and scaling it and building brands locally, et cetera. So that said, if I'm building a company, I would still be focusing on the US market right now, because it's where you get the most value. You have like 350 million like rich people that are early adopters of your products. You can sell them at pretty high prices. It's easy to raise capital. It's easy to get exits. Even if you fail, you get kind of acqui-hires and you can still like salvage the exit. And so I still prefer building and investing in the US. That said, especially a few markets like Brazil and India are fascinating, of course, Warren. And if I was in India and I have a comparative edge there, yes, I'd be very happy to focus and invest and be in India. But the rest, it's harder to build look, are there interesting things happening everywhere globally now? Yes. And the answer, because the cost of launching a startup has basically gone to zero. Now, even a non-programmer could use Lovable or Cursor and start becoming reasonably good and creating a startup for almost nothing. So between Cursor or GitHub with Copilot and AWS and the cost of launching a startup and you have an explosion in creativity and company creation from non-traditional backgrounds. You no longer need to be a Stanford computer science grad. We're seeing interesting companies emerge from everywhere. But that said, because the world is still capital constrained and you need people to buy your products, I still try to focus on the larger, more interesting markets. But we're seeing amazing things happening everywhere. And we do invest a little bit in Vietnam and the Philippines and Indonesia, et cetera. It's just that all that falls in the 5%.
Thanks, Fabrice. And I think for everyone else, I think because I worked with Fabrice, I want to really tell about him. He's one of the most positive people I've met, and one of the friends of friends. I think he's very large-hearted, very transparent. I think there's nobody in the world I've met who will share everything about himself openly. And I think I have found that amazing, because I feel that people operate in two worlds, one where they show and watch they live. I think he lives the world so openly. And I think I also now, I think since I worked with him a long time back, I feel that he's relentless. I mean, so wish you more power, Fabrice. You are amazing. I think, and you're unstoppable. And I think keep going, and love to catch up with you soon.
Yeah. No, thank you for the kind words. Look, I'm built ambitious, right? Where does that come from? Who knows, right? Many people who have like I never built companies to make money. I built companies. I like creating something out of nothing. I like having an impact and try to make the world a better place and living what I find is a purposeful life. Now, to Ambar's point, most people, I think, don't or not their true authentic self, right? Like they have a facade when they interact with the rest of the world, but when you are authentic, it comes through. And by the way, it's so much easier to be yourself. Now, that said, if I lived at, I don't know, Mexico and there was risk of kidnapping of my kids or me or whatever, I probably wouldn't be as transparent and open as I am. It just so happens that I feel that I can be in a position to share and be my true authentic self in a way with no downside and risk, and it resonates better with people to be authentic. I'd like to answer Juraj's question because I think it's actually very important, given the current bubble in AI. So Juraj, if you want to ask it.
Yeah, you read it, but I think there was two aspects. One is it more complex than the previous generation of startups? Like in the previous decade, it was still, you could sort of foresee where the market is going to evolve, what the product and the solution, and it wasn't the uncertainty was very limited. But now there's complex. Like some of the companies have scaled up so quickly, with like 10 million ARR, which used to take 4 or 5 years, now happening in 1 year. And then the future rounds become very expensive. You don't probably able to do pro rata and all that kind of stuff. So that's one side of the question. The second is also these companies, as you said, the 75% of the companies in the last 1 year are all AI. Are they gonna fail also far too faster because the newer ones will come then eventually? So they're kind of two different things, yeah.
So look, is AI a megatrend? Absolutely, right? Like will it transform the world in ways we cannot even begin to imagine? Absolutely. I also think though, like in every other tech revolution, it'll take longer than people think, right? Like in the 90s, we had pets.com, we had Webvan, we had all these ideas at Cosmo, and kind of the ideas were good, because ultimately we ended up having Chewy and we ended up having Instacart and we ended up having Uber. It's just that tech and the market weren't there. Right now, the valuations at which people are investing imply that AI will take over the world, lead a massive productivity revolution immediately. And we on this call are the early adopters, right? 100% of our startups are using AI to improve programmer productivity, to change customer service, to improve sales, to actually change the funnels of buying and selling. But when I go and look at these larger companies, they are so far, or even SMBs, they are so far removed from implementing this. I suspect this revolution is going to take a lot longer than people think. So there's going to be this moment of disillusionment that is coming. And as an investor, I like to be contrarian. In February 21, I wrote this blog post entitled "Welcome to the Everything Bubble," where I said, look, if the valuations are so insane in every asset class, if it's not anchored to the ground, like sell it. I suspect something similar is happening in AI right now. Like people miss the boat. They should have invested in GPT or OpenAI like 5-6 years ago, and they missed the boat. So they're investing in everything else. The problem I'm seeing is multifold, and it harks back to the problem of 2021. For each AI category, I see 5 or 6 or 10 well-funded competitors. So whatever category it is, you have a team from Harvard and a team from MIT and a team from Princeton and a team from Stanford and whatever, all with 20 million of funding, all going after it. What worries me is that the competition between them is going to bring the economics down to zero. They're fighting for talent. They're increasing the customer acquisition cost by spending money in marketing or sales, and they're decreasing pricing in order to gain share. So it's leading to non-economic behavior. So one big problem that's super competitive with a lot of companies is so hard to tell of these 6 amazing or 10 amazing companies, which one is going to win. Problem number one. Problem number two, valuation you're investing in is very high, such that if you don't actually grow to the 100 million in AR or whatever in record time, it's hard to imagine how you're going to make money out of this. Problem number three, you may think you've won, and then all of a sudden OpenAI offers what you're doing for free, and then you go from 0 to 4 billion in valuation like Olive.ai, or you're like Lenza. Lenza went from 0 to 60 million a month or 30 million a month, back to 0 3 months later when people realized that they had used it and they were done with it. And I see these companies, even the current winners, right? Like the 2 winners from an ARR perspective right now are Cursor and Lovable. 0 to 100 million AR in record time. The thing is, Can I imagine a world where basically GitHub Copilot just gives it away for free? And this is a race to the bottom in revenues in the future? Yes. Can I imagine a world where, for whatever reason, OpenAI decide this is something they want to do and they offer it away for free? I, 5 years ago, 2 years ago, I used Midjourney for images. Now I just use DALL-E. 2 years ago, when I wanted to do a video, I used Runway. Now I just use Sora. So this is kind of scary. You can have category expansion by OpenAI. You have lots of competitors. You have new orthogonal people arriving. So DeepSeek ended up not being an existential threat to OpenAI, but it could have been. And these DeepSeek moments could happen in any major vertical. So it's not to say I don't invest in AI, but I'm very careful. The AI I invest in is vertical applications based on differentiated data sets where the data you have access to is profoundly different at reasonable valuations that are not far from the normal valuations. So right now, our pre-seed deals are like 5 or 6 pre, but in AI, they typically are 25. I'm not going to do more than 8. Our pre-seed deals in the US, and these are US numbers, or like 10 to 12 pre. In AI, they can be 50. I'm not going to do more than like 15. Or seed deals are or seed deals are 10 to 12. I'm not going to do more 15. Or A deals right now are like 7 to 18 pre, 8 at 20 pre, maybe 10 at 30 pre. And in AI, I've seen stuff at like 100 million. I'm going to stay around where our median is. And the median, of course, is way lower than the mean because of like second-time founders, AI, et cetera. So I try to stay within the right valuation range, and I am seeing deals at the right price with differentiated data sets in verticals where there's a willingness to pay. Right. The issue is there are many categories where there's no willingness to pay, and giving me metrics like, oh, I get that many users per day and DAUs, et cetera, is not something I value. I value unit economics and CAC and retention and that contribution margin, et cetera. And so we are seeing interesting deals. We're in like VOCA, which is helping doctors' offices in Europe and France specifically to digitize and connecting the electronic medical records. We're in a company that's helping cities collect parking tickets. I mean, there's a whole bunch of stuff like in these vertical AI companies that we're doing. But again, we invested in the right valuation and the right teams, et cetera. And so as an angel, I would be very, very, very careful because you might just be better off investing in the current round of OpenAI at a whatever 300 billion valuation. I think they've won. I think they will continue winning, and they'll be a $1 trillion company or whatever multi-trillion dollar company in the future. That's probably a safer bet, despite the price, than investing at 100 pre in a seed or A company in AI.
Got it. Thank you.
Fabrice, I think this is a great moment to ask you a question about your anti-VC strategy, right? Selling winners on the way up, and especially against this backdrop of AI and forever private companies and permanent capital vehicles. So another structural question around venture. We'd love your thoughts.
Yeah, so venture is seeing a profound shift, right? Because there's been no exits in 22, 23, 24, there's been no DPI. So venture is in the midst of a profound transformation and recession. 2,000 VCs have closed their doors in the last few years in the US. And we're seeing a schism between the winners that are in massive funds that, or I would not even describe them as venture funds anymore. I would describe them as asset accumulators. The Andreessen Horowitz, the General Catalyst, they basically now have billions, and they're becoming evergreen. They're saying once the companies go public, their eyes, they're holding the stock, et cetera. They're no longer going to be giving 3x returns. They're going to be like compounding at 10, 15%, which pension funds think are okay, but it's no longer venture. And then on the other hand, you're going to have a specialized, like we are in a way, the marketplace seed asset light funds that are like 300, 400, 500 million that are specialized in different categories that, because their expertise, can do rather well. And everyone in the middle, I think, is going to die. And what's interesting is many of these funds, the reason they're dying is because the LPs feel overexposed to venture. They've had better returns by investing in NASDAQ and the S&P 500, and there's no illiquidity premium. And our strategy of selling or winners on the way up is actually, especially for an early stage fund, proven to be correct, because the beauty of not leading, not having 25% of a company is twofold. One, you don't need to do a pro rata. So if a company is doing okay and you own 25% of it, you have to do your pro rata, even if you don't want to, because if you don't do it, the company dies. It doesn't get funded in the next round. And so VCs end up writing a lot of follow-on checks in companies they would rather not be, but they have to. The second thing is, I don't believe in this. Oh, if the winners do keep on winning, but you don't invest at any price. And so I will evaluate every single round as though I'm not an existing investor, knowing what I know now of the team, of the traction, of the category, of the valuation. Would I invest in this round? And what happens is the winners often, I feel, are priced to perfection. They're like at 100x AR. At 100x AR, it's going to take years for them to grow in the valuation. But they are the winner, so there is demand for it, right? You can't sell the dogs, right? Like, so I don't want to invest in the dogs, but no one will buy them for me. But if the company is crushing it and I find is extremely priced over where it should be, we often sell 50% of the way up, because there's an opportunity as the VCs want more ownership. And by the way, the founders don't dislike it, because they're like, look, Greylock and Dreesen and Sequoia all want in. I want them. They all want 15%. I don't want them to fund a competitor, but I don't want 45% dilution. So I'll take 30% dilution. I need to find secondary. And you happen to own 2-3%. As a favor, would you mind selling? And I'm like, look, I love you, but I'm happy to help out. And so we typically sell 50% when in the winners, when we feel the company is doing well. And it is the reason we've added 30% realized IR. And we actually have had exits in 22 and 23, 24, and 25. Most of our exits have come through secondaries, either through platforms like Forge, which are like marketplaces for secondaries, or on the way up. But you can only sell the winners. That said, we don't always sell the winners, because if the winners are priced correctly, we keep investing. So it's not because we've added 10x or 20x or 50x or 100x we'll sell. It's literally based on what I know now of the company, of the traction, of the terms. Do I think it's overpriced? And if it's a bit overpriced, we probably hold. But if it's massively overpriced, then we sell. In 21, whenever Tiger and SoftBank were coming in, we basically had a heuristic. If they're coming in, we sell. It was a very good heuristic to have. Right now, there's actually a lot of stuff that we feel is priced correctly, and we keep investing. So Vinted, the last round, was at a $5 billion valuation. If we had more capital, we would have backed up the truck and wrote a like 10 or 20 or $50 million check. Now, I don't have enough capital to do that. My fund is only 290 million last fund. This fund is going to be 300 million. We just did the first close. But yeah, selling on the way up, taking liquidity, you're not going to regret it. And by the way, selling 50% is kind of the magic number, because if it goes to 0, you've made 10x, you're happy. If it goes to the moon, you still have 50%, you're happy. And so on average, we sell 50%. Now, if it's outrageously priced, like 100x AR, maybe we'll sell 75%. And if we're a bit on the fence, but if we sell 25%, we get 3x and we're still happy to run it, maybe we'll sell 25%. But most of the cases when we do sell, we sell 50%. We typically don't hold in the public markets, by the way. So we either sell into the IPO or we sell after the lockup. And the reason we don't is we're not public market investors. And right now, I have proprietary access as CEO, right? The CEO. I don't know why my webcam disconnected. Let me see if I can reconnect it. But right now, I can talk to the CEO, and he gives me, if we have perspective, I can be helpful. We can have meaningful conversations. Okay. Okay, I'm just trying to do it. Okay, we can have meaningful conversations. We have proprietary data, et cetera. The minute it's a public company, we're a tiny investor amongst, Fidelity and whomever. We no longer have proprietary information. And frankly, I've been compounding at 30% IR in the private side. I think there's zero way I'm going to compound at 30% IR in the public side. So I'm going to keep reinvesting in the private side. So take liquidity and reinvest. But of course, I have a venture fund / angel investing machine, so I can do it. If you don't have that, you probably shouldn't do that.
Fabrice, before we go further, I want to make sure, do we have some time? Do we still have some time with you?
Yeah, I'm free until for the next 25 minutes.
All right. We can't have you not ask questions around marketplaces. And so, Fabrice, look, you've solved just so many different problems within marketplaces, global marketplaces. But what do you think still remains unsolved or undersolved at scale in the context of marketplaces?
So if you think of your consumer life, marketplaces have basically transformed them for the better already, right? If you're in the US, you have DoorDash, you could get food in like 15 minutes. You have Instacart, and you can get your grocery delivered in an hour or two. You can go to Amazon, which is, by the way, mostly a marketplace, and you can get whatever you want in a day or two. You have Airbnb, you have Booking. I mean, your life is pretty extraordinary. And despite that, by the way, there's still innovation in marketplaces. We're starting to see peer-to-peer rental marketplaces like Pickle come to the fore. We're starting to see live shopping marketplaces like Palm Street for rare plants coming to the fore. But if you go to the B2B world, we're at like day zero. We're in the dark ages. And I mean at every level of B2B. If you want to buy inputs like petrochemicals, there's not even a catalog of what's available. There's no list of what's available. There's no connectivity to the factory to understand manufacturing delays and capacity. There's no online ordering. There's no online payment. There's no tracking. There's no financing. This needs to happen for every input in every geography and every category. So whether you're buying whatever minerals or gravel or steel, but it's also for machine parts and heavy machinery and you name it. So all input categories. Number two, SMBs need to be digitized. And that's not only true in places like India, where all the little bodegas, et cetera, are all pen and paper. It's also true in the US. And so we've been investing in digitization software for dry cleaners, for people running yoga classes and spas. We've been running it for barbershops, for pizzerias, for Chinese restaurants, you name it. All of these are like literally sub 5%, typically sub 1% penetration. That's true of creating the entire infrastructure to support these marketplaces. So payment mechanism, shipping mechanism, last mile picking and packing, automation companies. We're investors in a company called Formic, which basically is a marketplace to help companies bring robots into their assembly lines. So re-commerce is only now coming to B2B. So we're starting to see re-commerce marketplaces for apparel, a company called Ghost, or for baby stuff, a company called Rebel. I mean, so we're at the very beginning of marketplaces making a dent in B2B. And B2B, of course, is way more of GDP in a way than the consumer world. So we're talking of trillions and trillions, right? Petrochemicals, 4 trillion, steel, 1 trillion. I mean, and we're at like day zero. So everything needs to be done. It's a massive mega trend that will last for the next 2 decades, basically. And I'm happy to ride on the coattails of it.
And a question related to the role of AI in marketplaces, Fabrice. So this one's a specific question. Amongst the smartest founders you know, how are you seeing them figure out how to get better at answer engine optimization in this post-LLM era?
Yeah, so first of all, what's interesting is many of the marketplaces were worried that, oh, the top of funnel is going to be captured by the LLMs and they're going to be disintermediating me, et cetera. And I do not worry about that at all. Because if you think about the way people behave and buy on marketplaces, it's threefold. Either they don't know what they're looking for and they like to browse and shop. So it's like shopping as entertainment, which is like OLX or Vinted. In which case you don't want an LLM to give you a better funnel, et cetera, because actually the point is actually seeing a feed, and you typically look at low value items and you find something you like, you buy it. The conversion rate of visit of buy is low. So there's no role for an LLM there. Number two, search. So a site like eBay or frankly Amazon, you know exactly what you're looking for. You put it in the search engine, boom, you're done. There's no reason to go to an LLM just as an extra click. And number three, though, consider purchases. So something where you don't know exactly what you're looking for, then or it's something where you are going to take your time because it's a high value item. So buying real estate, buying a car, or maybe buying like specialty equipment. There, an LLM can play a role, but even then, it's not obvious that the winning LLM is GPT versus actually a specialized site like Carvana that has an LLM to help you make decisions on what to buy. Like on Amazon, there's Rufus, which is pretty good at giving you advice on what to buy. So I don't worry about the LLMs disrupting the top of funnel. So I would index myself. I would do AEO. And there are companies like Graphite HQ that are very good at AEO. And by the way I think about it is if you're willing to index yourself in Google you should be willing to index yourself in in the LLMs. And if you have a 99% market share in your category, then don't index yourself in Google, because you don't want the behavior people go there in order to search. But even then, like if you have a massive dominant share, even if people search in Google or the LLMs, because the results will come from your site, so you're still winning because you're doing the fulfillment, you're doing the payment, and these guys will never do that. It's not at the top 100 things that GPT wants to do in the next decade. It's not. They're not thinking of that. So even if they capture top of funnel, because you have liquidity, because you have fulfillment, payment, etc., you're still going to capture all the value. You know, if you go to Google today in the US and you type a whatever LG C4 OLED TV 65-inch, all the results are basically Amazon and eBay. You know, they have like 80% market share, so they're getting all the value, even if there's a little bit of revenue there. So I would do AEO. There's a company called Graphite HQ that's very good at helping with AEO. Now, there are things beyond AEO that I would do, and you know, get the free traffic. But beyond that, you could use AI for, and I would use AI for the following things. One, if you want to be cross-border, it is now with AI, you can actually translate the listing. So within India, for instance, you could, because there are different languages in India, I could actually imagine translating 100% of the listings across all the languages. So even the consumer-generated content, you translate the listing, and then you can auto-translate the conversations between the users. So right now in Vinted in Europe, before Vinted, Europe was not Europe. It was a French site, a German site, a British site, a Polish site, a Lithuanian site. Vinted actually translate the listings between all the languages. The conversations with consumers are also translated, and they have a great embedded payment and shipping. Now, it only works because they have embedded payment and shipping, but as a result, they've now become a true pan-European company. So I can imagine having a true pan-Indian company with automatic translated all the listings, all the conversations, et cetera, as long as you figured out a way to do payment and shipping. So cross-border is becoming a thing because of AI. We have a company called Evoco doing it for car parts, car and sale doing it for B2B cars, etc. Number two, I would use AI to massively improve your sell funnel. The old way of listing things on marketplaces is you take 10 photos, you pick a category, you write a title, you write a description, you select a price. But the reality is, you as the marketplace, you have the data. You should know, you should be able to recognize what the item is. You should be able to pick the category, write the description, write the title, even consider the condition, and suggest a price. And so you should make it so easy that your visit to listing rate should improve dramatically. Number three, I would improve the search engine. In the long term, the way Amazon has done it, which is 2 search engines, Rufus to ask questions about products and 1 search engine for search results, doesn't make sense. You're going to have only 1 search engine where you can ask anything, whether it's like, oh, I want to buy whatever the LG C4 OLED TV, or what TV should I buy, right? Like it could be 1 search box for both a LLM type answers and for product type answers. And then beyond that, of course, I would use AI to improve programmer productivity. Everyone should be using GitHub or Copilot or Cursor. Everyone should be using AI for customer care to do all the basic stuff, like whatever returns, payment issues. I mean, AI can be so profoundly good, and everyone should be using AI to improve your sales teams. There are tools out there that can basically bring your average salesperson productivity to 90% of your best salesperson productivity. So I would use it for that. And then on top of that, I would do AEO in order to get access to free traffic.
Wow. What my final question for you, Fabrice, how are you able to do so much? And you said you tell us how you outsource ruthlessly. And which side quests are you most excited about right now?
So I guess 2 different questions. One is, in life, I like to be intellectually stimulated, and I outsource all the things that I find repetitive and non-interesting. So this way, I like to be the creative director, if you want. So I know Alexa, I'd like to play with product. I wanted to be doing the Figmas and writing the user stories, etc. Here at FJ Labs, I want to talk to the most fascinating founders I want that both the new ones that I would like to invest in and the ones that I've invested in to help them, and then daydream about like what are the trends, what should be happening, what's happening in AI, write blog posts, etc. And so the reason I have FJ Labs, the reason I have a VC fund is actually the team allows me to only focus on things I'd like to do. So FJ Labs, we have 9 investors total who filter the 300 deals so I can talk to 5. That's why I have a VC fund, by the way. But things I do. So I have virtual assistants in the Philippines. I have 2 of them. And I outsource ruthlessly everything from like thinking through paying all my bills, coming up with ideas for days, new interesting shows to go see, managing, of course, all my agenda. You can outsource a lot more than you think you can. I have I have an offline butler that takes care of all the offline things. Now, of course, a butler is a bit more expensive, though probably not in India, but like a virtual assistant in the Philippines, full time is like 1,500 a month. And I like creating for my parents a photo album of all my adventures of the year before. I have a photo album creator that I hired on Upwork who's in Bangladesh. I do a video, and I'm actually a pretty good video editor myself, but I have someone to help me on video editing that I found also on Upwork to help with the video editing. So I ruthlessly actually, like even the childcare, I have 2 kids, I have a 4-year-old and a 1-year-old. I basically found on care.com 5 nannies that I hire, I pay them hourly, and I create an online Google Docs where I write the number, the coverage I want, and they agree between themselves who takes what shift. And when I travel, one takes 1 week, the other takes 1 week, etc. And so they will actually fully self-manage and regulate the shifts they take, because of course the French nannies only want to work 20 hours a week max. So that's why I need 5. But you can all the things you don't like to do. Like I don't like to cook, so I have a chef. You can outsource everything in life to focus on the things you'd love to do. Now the side quests in my case and the things I love to do, as I said, it's a combination of like meeting these extraordinary founders, writing, thinking, but frankly, it's like spending time with my kids, and I love to play. And I play tennis, I play paddle, I kite surf, I go backcountry skiing. Every year I go on a crazy off-grid adventure where, I walked to the South Pole 2 years ago where I was pulling my 100-pound sled in -50 weather, which is kind of like a active Vipassana retreat because you're alone with your thoughts, walking 8 hours a day, and being off-grid in this hyper-connected world is such a true privilege, where you can be reflective and thoughtful. So yeah, continue to explore, what it means for me to be spiritual, to be a good person, to read. I read an hour and a half every day before bed. So I read like 100 books every year. Currently, I'm rereading for the nth time Meditations by Marcus Aurelius, which I highly recommend to everyone out there. So yeah, no, I have a lot of side quests like hosting my salons, like and it's fun. Like I just want to the purpose of life for me is to live a rich life, to to find things that bring you purpose, meaning, to communicate, to be social, and to be entertained. And but even work for me is entertaining.
Fabrice, this has been great. Thank you again so much for your time. This is really fuel. I think for all of us who attended, this is fuel to go by for the next few months. Such a pleasure. Have a great rest of the day.
Thank you. Actually, I have a few more minutes. So if Snehal wants to ask this
All
question,
right,
I see his hands right.
Yeah.
That's fine.
So no questions, Fabrice. Just wanted to thank you. I don't know if you remember, we have been connected on Facebook for more than 12 years now.
Oh, wow.
And I think since 2012. And this is when I was just starting entrepreneurship. There was hardly any resource or learnings or network or offline to learn from other founders. And you have always been kind. I think we have interacted 3-4 times on Messenger over the last decade. And you have always been kind to reply and guide. So thanks a lot for that.
Thank you. I mean, it is words like these that actually are the reason that I like to share, that I like to write, that I like to put out there what I've learned. I think the reason I have my blog, Fabrice AI, is sharing what are all the things I wish I knew when I was starting as a 23-year-old entrepreneur and founder that I now know.
Thanks
Well,
a lot from that 22-year, 23-year-old also.
Thank you, everyone. This was super fun. Feel free to follow up, and I'd look forward to continuing the conversation.